The new supply and demand report is out, but before we get to that, let's talk about where the markets were before it was released, Kim.
Well, the markets were mostly in the tank. You look at corn, and let's look at the Chicago December contract. It was down to 344. That is, it's been trading between 344 and about 360, 370. It's right on the bottom. It's right on the support level before that report came out. Soybeans were at 966. They've got support down around 950. Resistance up around 987, so they're in about the middle of their range. And we've seen slightly higher soybean prices where wheat and corn's been going down over the last couple of weeks. The KC December wheat contract, $4.24. It's just been working its way down, just really grinding down slowly. It's almost about ready to hit that $4.20. That's the contract low. If we break $4.20 on that wheat, well, we're already in trouble. We're just going to be in more trouble.
The report, of course, was released on Thursday. What were the big takeaways?
Well, let's look at ending stocks. For wheat on the United States, the market was expecting 946 million bushels. They got 960, so higher than expected. You look at the world ending stocks, they were at expecting 9,660 million. It came in at a record 9,850 million, higher than last year. Finally, you go back a couple months, we were down at 9.2 billion for world ending stocks. Corn, the market was expecting 2,290 million bushels. It came in at 2.34 billion, slightly higher than expected. If you look at world ending stocks, just about near expectations. They were at 7.95 billion bushels. It came in at 7.91. Soybeans, the only good news in the market was expecting 447 million for U.S. It came in at 430. And the world, they were expecting 3.54, and they essentially got that.
And what do you think the reaction's going to be as a result?
Well, soybeans will probably keep moving up just a little bit. I think that's the good news in the market, and you might as well start with that. We'll have to see if wheat breaks that 420. There's just really nothing out there for higher wheat prices. They raised Russian wheat production to over 3 billion bushels. You go back 3 years and they're below 2 billion bushels. They're readily marketing 12.5% protein hard wheat. You look at corn. High corn stocks, near record corn production, second highest ever. We're not going to be able to move any of this wheat out for feed, so it's not going to help. It's going to hurt more on the wheat prices. Corn prices, not much hope there. Soybean, that's the only place that the market can move up.
And speaking of grain prices, you and the team are going to talk about that and a lot more at the upcoming economic conference next week. Give us a little preview.
Yeah, that's correct. Daryl Pill and myself and Larry Sanders will be talking about policy and the Oklahoma markets and Oklahoma agriculture. Then we've got some national renowned economists coming in. I think the one thing that's going to come out would be interest rates. That's kind of a sleeper over the last couple of years, but I think interest rates may be ready to go up, and that'll definitely have an impact on agriculture.
If you're interested, the Rural Economic Outlook Conference is always a great event. It's Friday, October 20th at the ConocoPhillips Alumni Center on the OSU campus. To learn more or for registration information, just go to sunup.okstate.edu.